Policy Committee has sprung a surprise. All 6 members have voted to keep key lending rates unchanged against market expectations of a rate cut. Now, the Reserve Bank has cited heightened uncertainty in the economy. The panel, that's the MPC panel, fears a loss of momentum in the third and the fourth quarters. However, even as it believes the full impact of demonetization is yet to unfold, it has cut the gross value added from 7.6% to just 7.1%. The other big headline from the Reserve Bank today is the admission that nearly 20 lakh crore rupees is back in the banking system as deposits post-demonetization. The central bank has also revealed that new notes worth 4 lakh crore rupees have been minted so far. And after dashing rate cut hopes, they've dashed hopes of a bonanza to the government. Any special dividend to the centre from the Reserve Bank has been ruled out by the central bank as of now, saying that liabilities will be maintained. Latha and Ritu bring us the highlights of the monetary policy.
In his first public speech since demonetization disrupted the economy, the Reserve Bank of India governor stunned the markets by maintaining status quo against all expectations. The Monetary Policy Committee unanimously left repo rate unchanged at 6.25%, citing persistence of inflation risks and high volatility in global markets, especially in crude.
The MPC was of the view that given the reduction of the policy rate of 25 basis points in October, which cumulated to a reduction of 175 basis points since January 2015, a further reduction in the policy rate is not warranted at this juncture.
In what may be a boost to market confidence, the RBI didn't see demonetization hurt growth too much. It cut the growth projection for this fiscal by only 50 basis points to 7.1%, saying that the impact of demonetization may be transient and growth could actually rebound by the fourth quarter. On inflation, RBI maintained the 5% target for March 2017. Demonetization, it added, could result in inflation dropping by 10 to 15 basis points by the third quarter. But the complete impact of wage hikes on the back of the 7th pay commission, which is yet to be factored in, and the rising crude oil prices could also pose a risk to the inflation target.
The committee felt that it is now important to ensure that the targets of 5% for Q4 of 2016-17 and of 4 plus or minus 2% for the medium term are achieved. This assumes critical importance in view of the stickiness in inflation, excluding food and fuel.
What came as a relief to the banks was the waiver of 100% incremental CRR for deposits between September 16th and November 11th, with effect from 10th December. On the deposit data since demonetization, RBI did indicate that almost 12 lakh crores was back, but did not specify the exact amount as of today.
The old notes that have come back, it amounted to, as of now, 11 lakh crores, 11.85, almost 12 lakh crores.
While 12 lakh crores may have made its way back into the banking system, speculation was rife that the unreturned old currency would just be passed on to the government as dividend from the RBI. But RBI did clarify that that would not be the case.
Withdrawal of legal tender characteristic status does not extinguish any of the RBI's balance sheets, and therefore there is no implication on the balance sheet as of now.
In Mumbai with Latha, Venkatesh, Ritu, Singh.